If you're a business owner, you will know that one of your responsibilities is to submit your information, your accounts, your tax returns and all that jazz has to be sent to the Inland Revenue by a deadline. What's really interesting is that I'm recording this video in January, and just recently I saw a report, I think over Christmas, where there was 5.5 million tax returns still outstanding at Christmas, when I think there's only about 9 million that get submitted. So more than 50% of the returns were outstanding with just 30 days to go. And this isn't a new problem. I've been an accountant for over 35 years. I still run an accountancy practice alongside our coaching and mentoring business today, and we have clients that we look after in both respects. And a new client came to me recently and went, "Oh, I need a tax return." And they brought their stuff to us the second week of January. And then they got a bit upset because they were missing some information that meant that we couldn't submit the return. And that information was going to come to them via the post sent from the government. Now, at today's date of recording this video, that information did arrive on time and the job has been submitted, so fantastic. But the point is, this person got very upset, actually to the point where they had tears on the call with me because they were frustrated with the thought that they might have a fine, frustrated with the whole exercise of having to submit this stuff to the authorities. And it was just hard work. Despite the fact we were doing it for them, they just found the whole topic really hard. And because I've been doing this for so long, I've seen this, unfortunately, way too many times. But I've been on a mission my entire career to fix this for people. And I've even actually coached and mentored accounting firms to help them change their processes, because they unfortunately are part of the problem. And I'm going to cover all of that in this video. But what I want you to take away as a business owner is I want you to have a few aha moments to go, do you know what? That sounds a bit like what we do. And we can control an awful lot of the things our side of the fence to prevent this from happening. And if you do that, the benefits will be, and I'll show you what those benefits are. So let's start at the beginning, shall we? And I'm sorry that it's a bit of a boring subject like accounting and tax and bookkeeping, etc. But that's what I do sometimes, this boring stuff. But it's also very, very important. And as I said to somebody the other day who was claiming that they were sitting there with some spreadsheets and doing some detailed forecasting that we were working on, they were saying, well, I'm just sitting here doing these boring spreadsheets. And I had to remind them that those spreadsheets and the time that we'd spent together, and we spent half a day together going through those figures, we generated more money from the numbers that we were working from than the entire sales team did this quarter. So it's actually a very profitable thing to do by spending time analysing and looking at what all this data means to you and how to get the best out of it for you. So I'm going to start with the Inland Revenue. The Inland Revenue, we have to send them a series of reports and forms and documents to them by a certain deadline. Nearly everything that the revenue want from us now has a deadline. And guess what? If you miss the deadline, there's a fine. I'm sure there's some data somewhere, but the amount of money they must collect for fines, £100 here, £100 there, and so forth, it's colossal, because we all have to remember that when we've done something in our business, we have to go, oh, I've got to fill this form in and submit that within a certain deadline date. And you know, even the accountants will not remember every single one of those unless they're doing that sort of work necessarily all of the time. So the basic things that we have to do, accounts and tax returns, have to be submitted. And normally the timeline goes from whenever your year end is, you normally get, 9 to 12 months to submit that to the Inland Revenue. So this information has to go into the Inland Revenue within 9 to 12 months of that period of time, generally, okay? When it comes to the tax returns, our personal tax returns, that year end is actually the 5th of April, sometimes the 31st of March, okay? But basically you've got from the 5th of April to the 31st of January to submit that return. So you've got this whole sort of 9-10 month period to do that. But of course the data that you're submitting on is for the period up to that date. So this data, which you've captured in your bookkeeping system, should already be there at the year end. And therefore, the first thing that you should question yourself is that if you are keeping the books for your business, whether you are keeping it or you have a bookkeeper or your accountant keeping those books, and I'll cover that in a minute, is that you should set a little bit of a criteria within your business that says, I want to see that my books are complete for the previous period, maybe month or quarter, but by the 5th or the 10th of the month. Set a date. And if you set a date that when those books are completed by whoever completes them within your organisation, run a report. So what we want from our bookkeeping system is a report. Because we're going to use that report to have a conversation, a discussion. We want to bring that report to the table to discuss it, even if it's for just 10 minutes. And the reason that we want to do that is it sets a rhythm. It sets an expectation. Lots of business owners that I've spoken to over the years will go, I know what my sales are, I know what my figures are, they're all in my head. And because they're going about their day, they have certain mathematical criteria within their own mind that they know whether they're doing okay. So you could talk to a garage who's servicing cars. They'll know how many cars are coming through the books for the week. They'll go, well, I've got X number of vehicles that are going to be serviced and MOT'd this week. Therefore, I'm meeting my criteria, because they've already worked out what the benchmark is, what the sort of break-even point of number of vehicles to go through. They know that there's a bit of a difference between the exact numbers, but also you've got other businesses like people in design or something like that who are sitting there going, I know we're okay because we're busy. All right, the team are busy. We're struggling to get all the work done. So there's an element of being busy versus not being busy versus the amount of sales coming in that you kind of know your own figures. You should do, okay? But what this reporting does is it keeps us on track for what we should be doing. And there's a subtle difference because what will happen is that you'll build your business and you'll find that your expectations are here, but the reality is here and there's a gap. Now, when that gap's only a little bit of gap, we have an ability in our mind to justify and deal with that gap. But if that gap gets bigger, that's where the problems kick in, because then we default to the worry and the blame and all the other things that go on. And what this little reporting process does is it says, look, this is where we're at the end of this month, at the end of this quarter, or the end of whatever period you're testing, so that you can just keep that gap as a minimal gap between what you're expecting versus where you're at. Now, for the professionals who want to do this to another level, what we would do is make sure that this report really is the right report, which might mean that we have to go back and make some adjustments to how we do our bookkeeping and our processes to make sure that the if you like, the standard operating procedure for doing our bookkeeping is as expected to get the right report coming out, so that we can then do other reports like budgeting and forecasting and analysis of our sales and anything else that goes towards our sales campaigns. Okay, so we can go real ninja on this, but it starts with having the right information in the first place. Now, back to the timing. If this is happening on a regular basis, then there's no reason why shortly after your year end, you shouldn't have the information that you're using for your business to say, well, we know it's right. That's ready now to go to the accountant, to go to the Inland Revenue. And it might go to the Inland Revenue via the accountant. And your accountant might be part of the problem why things are left to the last minute. I hear stories of, well, I finished my books in April, I sent them off to the accountant, and the accountant dropped them to me at Christmas, left it to the last minute. Why do they do that? Well, let's have a little conversation about the accountant. First things first, the definition of accountant and the role of the accountant has changed over the years. I've seen this change in my career. The distinction between bookkeeper and accountant used to be very clear. The bookkeeper would come into your premises and write up your books. or was employed full-time to write up the books, handwritten ledgers. And the accountant would come in from time to time and collect those books, borrow them, and extract the data from them to produce the accounts and the tax. Now, because we have software that can do both, what we often find is you have bookkeepers and accountants who are actually one of the same thing. You get really good bookkeepers who say, well, I'm here, I can do the accounts. And you get accountants who spend much more time sorting out the bookkeeping. And where the big challenges is, and this is more of a sort of global challenge, and do you know what, it is global challenge, because I've actually spoken to colleagues in places like Australia and the Philippines and around the world, and it's a global problem. The quality of the bookkeeping that's coming out of the systems is by and large pretty poor. And so whoever is helping you, the bookkeeper or the accountant, is spending most of their time sorting out the books to get them into shape so that they can actually rely on it to produce reports. And I can give you lots of horror stories of what some of the accountants will do out there. For example, some of the accountants out there I know, because I've recently picked up some jobs from them, they will take the books and records from the digital cloud-based system, download the data, produce a set of accounts, make some adjustments to those accounts, but not put those adjustments back into the books over here. That means that when you get to year 2, year 3, they're so far different between what's been reported and what's actually on the system that the system is almost useless. And therefore the business owner can't see the results. Nothing makes sense to them. Okay, so the accountants can be part of the problem. Equally, when you send over the information to the accountants, I've heard lots of stories saying, I've sent it in, the accountants have taken too long to do it. Why? Well, because their workload, let me grab a different colour pen here, their workload goes like this, right? Because they're used to doing all the work last minute, because guess what? 5.5 million people leave it to the last minute, and quite often they'll use their accountants to help them submit the returns. So you can wander around in January around any high street across around the country, look up and see the accountants' offices, and all the lights will be on at 8 o'clock at night on the last week of January, because they're all trying to get all this done, which means your accountants aren't really performing as they should. If you're trying to do 60% of your work in the last 2 months of the year, you're not going to be performing very well. Now, it sounds like I'm having a dig at the accountants. I'm not really. I'm not really having a dig at them at all, because I understand what they're fighting with. And the reason that they're fighting with an awful lot of their problems is because the industry is actually eating itself alive. If I go back to the 1980s when I started doing this, we would have done a job for a typical business, let's say, and it might have been £2,000 or £3,000 a year to do those accounts. Now, back then, that was a decent amount of money. That same job today is probably still that sort of level of fees or less. Tax returns, most accountants will charge £250 for a tax return. We were charging £250 for a tax return back in the 1980s. So the inflationary increase hasn't picked up with it, and the pricing structure of this industry is going down big time, big time. And as a result, they're trying to do more work for less money, and therefore it's having a massive impact on their own business because of the volume that's needed to work. Okay, so they have some problems with their own business, and what's driving that is technology. You can buy a piece of software for 10, 20, 30 pound a month, and it does everything. So the accountants feel that they should be able to do that. You can see the sort of problems it's heading to. So it's a general problem all over within that entire industry to get this stuff done. And guess what? Right in amongst all of it, we don't want to do it. Okay, nobody wants to do a tax return and talk to these people. Nobody does. So all of that mixture of reality of what's going on here means that things get to the last minute. But that shouldn't affect you as a business owner. You as a business owner should take the responsibility of this and say, no, I am going to keep my books and records for me and my business. I'm going to get to the point where I have a regular report that comes out of my business that I understand. that I actually understand what that report means. I understand what the sales are. I know that they're right. I understand the costs. I know they're right. I understand all of the overheads that are going on. And I know that in those overheads, there are things that are reported differently to the revenue that are reported to me. For example, you might have dividends or pension payments or depreciation or words like that you think, oh, I don't really understand that. You need to understand those words. And you need to understand the difference between what you're seeing as a report and what's being reported to the inland revenue. Be the same data. It's just the way that it's reported. Then you may have a balance sheet to look at, your assets and your liabilities. You'll be looking at your debtors and your creditors. You'll be looking at your finance agreements, your bank account, your cash flow. You might as well then take that report and get yourself in a position where you are doing a budget and a forecast looking forward. When clients do this, when we help our clients get to the point where they're actually looking forward with their business and actually deciding that this is what we're going to do over the next 12, 24, 36 months, it changes everything. Because when we do that, we actually say to ourselves, I need to do sales target needs to be this number here. And my costs are going to be this number here. And everybody focuses on this sales target because they go, oh yeah, we can do 1 million next year. We can do 3 million next year. Great. But what I'm always saying to people is, what's that going to look like in terms of a profit? The profit figure is the most important thing because that's the bit you keep. And what I'm trying to do with everybody that does this is I'm trying to get you to realize that the information that's coming out of your bookkeeping system, the reports that are coming out, this profit here should be same as this profit here when we look at our targets. Excuse my penmanship here. As we look at our targets, we should be able to say, this is what we did, this is what we have done, and this is what we're going to do. So today is where we're at. Here's our historical data. Here is our future data. And here is a graph that shows us we're going to improve. And this is the numbers that back up our improvement position. So we're just looking at this all of the time. And I've done this before on some other videos. There's a 5-step process to bookkeeping. Get the data into the system, verify that it's all okay, make some little adjustments that you need to that are specific to your business, start running some reports, make sure it looks okay. And step 5 is interpretation. What does it mean to you and your business? How can we use this data to help us build a better business going forward? If you change all of your focus to doing that, and you change all of your emphasis to get those reports done at the end of the year, at the end of the month, at the end of the quarter, on a regular basis, I promise you that this problem with the inland revenue will start to go away. Because even if your accountant chooses, or because of their situation, is led to leave producing the information to the inland revenue later than they planned. So even if you were submitting your tax returns in January, you shouldn't need to worry about that because you already know what the impact of it is. You already know your own profits. You already know what the tax liability is likely to be. You've got a good indication of that because you've got the data yourself. And if you've got a good accountant working with you on a regular basis, you can have those conversations throughout the year because the thing can change. The information that you present to the accountant, if you've got historical information and plans for the future, then they really can step up and help you plan things like your tax liabilities, etc., timings of dividends, how you take money from the company, when you take money from the company. These are very subtle things that actually you can decide, but you might need somebody just to help you navigate your way through that. But what we're trying to do here is get you to take the reins of this and take full responsibility for getting this done. Now, when it comes to the inland revenue, whenever you submit the information, whether you're doing it nice and efficiently straight after the period end or you're doing it near the end date, doesn't really matter. But if you are able to submit that information with more confidence, should these guys ever decide to come back and do an inquiry and look into your affairs, which they can do for any number of reasons or no reason at all, they can decide, oh, we're going to open up an inquiry on your business. And that can be several years after you submitted it. You should be able to say, okay, have an inquiry. Here's my books. This data is how we got to that information. We look at it all the time. We know the data is right. We know that there's nothing in there that we're worried about. And we know that whatever we've put into the books that we know that has benefited us, we're in control of. We know that. We've made those decisions. We've maximized the system to gain every taxable gain along the way because we've recorded it properly. Then come at me. Here's the books. Ask me your questions. Because if you're wrong and they find something, you can actually say, hand on heart, I did this to the best of my ability. They're not going to penalise you for that. They're going to actually, come to some agreement and fix that for you. Because if you've done your best over here and you've got some help to do that over here, the chances of you having a problem with them later on is absolutely mitigated because you're going about the right things. Now, that doesn't mean to say you can't make a complete mess of the whole thing. Your accountant can make a mess of it. You can make a mess of it because you've headed down the wrong route and made some wrong decisions. But if you're looking at it on a regular basis, you will soon get to understand your business and your business model, and you will understand what the rules are around that. Okay, so I hope in some small way that I can take this dreary subject and say to you, look, take some responsibility and sort this stuff out this end. Because just like the lady who came to me, she came to me just before Christmas and spoke to me, and I said, yes, I can do a job, a little tiny job. She then decided to leave it to the last minute and brought it in second week in January. When I told her that it could be a problem to submit it because we're missing this information, she burst into tears, not because we couldn't do it, not because there was the potential of the fine, but absolutely because of the sheer frustration, overwhelm, pressure, stress that's brought into her life. And she just left it and left it and left it and left it. Going forward, we'll fix that. We'll be doing this stuff back in the springtime, so she doesn't have to worry about it. And it takes away that big sense of relief for her, as we've done for many other clients. I hope this has helped you in some sort of way. If I can help further, leave something in the comments. I'll try not to do some boring stuff on accounting next. I'll go and do something a bit more interesting in a minute. See you soon.